Gold dropped 3% on a day the Middle East was still at war. That sentence should not make sense. Yet on March 23rd, it did. The $1.7 trillion whiplash. The session started in blood. Futures were deep red. Brent crude had surged past $106 over the weekend as U.S. strikes pounded Iranian energy infrastructure for a fifth straight day. The VIX sat above 28. Traders braced for another brutal week. Then, just after noon Eastern, a single Truth Social post from President Trump changed everything. He announced a 5-day pause on strikes against Iranian power plants, claiming very productive conversations with Tehran. In minutes, the Dow swung more than 1,000 points from its intraday low. The S&P 500 closed up 1.15%. The Nasdaq gained 1.38%. Oil cratered from above $106 to $98.83, a 7% collapse in hours. As CNBC reported, volume in stock and oil futures surged minutes before Trump's market-turning post. The rally was violent. Fortune described it as a $1.7 trillion stock market rally in minutes. Airlines and cruise stocks surged. Chip equipment makers jumped on Tesla's Terafab plans. Palantir shares climbed. Even GameStop rose. But underneath the euphoria, something was breaking. When safe havens stopped being safe. Here is the part the rally headlines missed. Gold fell. Bitcoin fell. Both dropped on a day when a war was still being fought, when the ceasefire was unconfirmed, and when Iran itself denied any negotiations had taken place. This is not how safe havens are supposed to work. The textbook says geopolitical crisis equals flight to gold. The 2022 Ukraine invasion sent gold to record highs within days. The 2020 COVID crash pushed Bitcoin advocates to call it digital gold. Every modern conflict has reinforced the same reflex. Fear means buy gold, buy crypto, hold hard assets. Not this time. BNN Bloomberg captured the shift in a single headline. Gold and Bitcoin fall as rate fears rise on oil surge. The mechanism is counterintuitive, but precise. Oil above $100 means inflation is not going away. Inflation not going away means the Federal Reserve cannot cut rates. The Fed holding rates at current levels, or worse, signaling hikes, raises the opportunity cost of holding zero-yield assets like gold and Bitcoin. The safe haven trade does not just collapse, it inverts.
Peter Schiff, the gold permabull, is calling this a 2008 deja vu and predicting a massive surge ahead. But in 2008, gold initially crashed 30% before rallying. The crash came first. If history rhymes, the pain is not over. The bond market confirms the signal. The 10-year Treasury yield, which spiked to 4.41% on Friday, its highest since July 2025, only retreated to 4.35% on the relief rally. In past geopolitical sell-offs, yields collapsed as money rushed to safety. This time, they barely budged. The bond market is not pricing fear. It is pricing inflation. Meanwhile, Citadel Securities issued a warning that cuts against the grain of Monday's euphoria. Investors are making a dangerous miscalculation about the Iran war. The firm's EMEA fixed income sales head said the risk to markets will remain high, with few easy exit options. The rally assumes the conflict is ending. Citadel is betting it is not. There is one more fracture worth noting. Stephen Miran, the Fed governor, said Monday that the Fed should cut rates and that the labor market slowdown justifies easing. His colleague Austin Goolsbee pushed back, warning about inflation. Two Fed officials, two opposite conclusions on the same day. The market's dream of rate cuts, as Business Insider put it, has been officially dashed, but the fight inside the Fed is just beginning. The one number that decides what comes next. The question is not whether Trump's pause holds. It is whether oil stays below $100. If Brent remains under $100, the inflation narrative weakens. The Fed gets room to cut. Gold recovers its safe haven status. The Monday rally becomes the beginning of a floor. If Brent breaks back above $105, which it was at just 24 hours earlier, the entire logic reverses. Rate cut expectations evaporate. Gold continues falling despite the war. The bond market reprices, and the $1.7 trillion rally becomes a trap. The IEA chief has already called this the worst energy shock ever recorded. Iran denies any talks occurred. Trump has reversed course within 36 hours before, from obliterate to productive conversations in a weekend, only for the situation to shift again. Watch Brent at $100. That is the line where safe havens either heal or break further. The war gave gold every reason to rally. It fell instead. If that signal is right, the market is telling you something the headlines have not caught up to yet. This is not a fear trade anymore. It is an inflation trade. And in an inflation trade, nothing is safe.